Imagine a sum of money so vast it dwarfs the entire economic output of most nations. A sum so immense it could fund the annual budgets of multiple countries combined or tackle some of the world's most pressing challenges, from poverty to climate change. This is the reality of BlackRock, an investment management behemoth that sits atop a staggering $10.6 trillion in assets. To put that into perspective, this amount is larger than the GDP of every country on Earth except for the United States and China. It's a figure that represents not just wealth but unparalleled influence. To put that into perspective, it's more than half the entire US GDP. A figure so immense it's difficult to even comprehend. Imagine the economic output of entire industries from agriculture to technology, and BlackRock's assets still surpass them. It's a scale that redefines what we think of as financial power. Now consider that this financial colossus has its fingers in nearly every pie imaginable, with investments in over 95% of Fortune 500 companies. These are the companies that shape our daily lives, from the food we eat to the devices we use, and even the energy that powers our homes. From the technology giants that dominate our digital lives to the energy conglomerates fueling our world, BlackRock's reach is pervasive, its influence undeniable. It's not just about owning shares, it's about having a seat at the table, influencing decisions that ripple across industries and borders. The question arises, how did one firm amass such unprecedented financial power? How did it grow from a modest startup in 1988 to the global titan it is today, with a presence in over 30 countries and clients that include governments, corporations, and individuals alike? The answer lies in a confluence of factors, from the rise of passive investing to the increasing complexity of global markets. BlackRock capitalized on these trends, offering innovative solutions that appealed to a wide range of investors. Its flagship product, the iShares ETF, revolutionized the way people invest, making it easier and more cost-effective to access the markets. BlackRock's ascent is a story of strategic acquisitions, technological prowess, and a keen understanding of the evolving financial landscape. Its Aladdin platform, a cutting-edge risk management system, has become indispensable to its operations, providing insights that drive smarter investment decisions. It's a story that underscores the shifting dynamics of power in the 21st century, where control is often exercised not through direct ownership, but through a complex web of influence and interconnectedness. BlackRock's influence extends into policymaking as it advises central banks and governments on economic strategies. This is the story of BlackRock, and its implications extend far beyond the realm of high finance, shaping the lives of everyday people around the world. Whether we realize it or not, BlackRock's decisions impact the food on our tables, the energy we consume, and the future of our planet. To understand BlackRock's dominion, we must first explore the transformative rise of index funds. These funds have revolutionized the way people invest, offering a straightforward, cost-effective alternative to traditional methods. The rise of passive investing has been nothing short of a seismic shift in the financial world. Unlike traditional active investing, where fund managers meticulously select stocks based on research, intuition, and market trends, index funds simplify the process by automatically tracking the performance of a specific market index. For instance, an index fund tied to the S&P 500 mirrors the performance of the top 500 companies in the US stock market. This hands-off approach eliminates the need for constant buying and selling, reducing costs and complexity for investors. The set-it-and-forget-it strategy, combined with significantly lower fees compared to actively managed funds, has drawn millions of investors, from seasoned professionals to everyday individuals, seeking a simpler path to wealth creation. BlackRock, recognizing the potential of this trend early on, positioned itself as a leader in the passive investing revolution. Through its iShares platform, the company became synonymous with index funds, offering a vast array of options. These options cater to every conceivable market niche, from broad global indices to highly specialized sectors. As passive investing gained momentum, BlackRock's assets under management soared, cementing its dominance in the industry. Today, the firm's influence is unparalleled, with trillions of dollars under its stewardship. This shift towards passive strategies, while offering simplicity and cost savings to investors, has also reshaped the financial ecosystem in profound ways, concentrating power in the hands of a few. BlackRock, Vanguard, and State Street, often referred to as the Big Three, now wield unprecedented influence over global markets. Together they have redefined the landscape of investing, raising questions about the future of financial power and control. BlackRock's influence extends far beyond its vast holdings. As one of the largest asset managers in the world, its decisions ripple across the global financial ecosystem, shaping markets, industries, and even national economies. At the heart of its operations lies Aladdin, an AI-powered risk management platform that has become the invisible hand guiding trillions of dollars in investments worldwide. This system, named after the magical lamp, is no less transformative in its ability to illuminate opportunities and mitigate risks. Imagine a system so sophisticated it can analyze mountains of financial data in real time, processing information that would take human analysts weeks or even months to comprehend. It predicts market movements with uncanny accuracy, leveraging historical trends, current events, and even subtle shifts in investor sentiment to forecast the future. Aladdin doesn't just analyze data, it provides actionable insights, whispering investment strategies in the ears of the world's most powerful financial institutions. These insights often dictate decisions that affect millions of people, from pensioners to policymakers. This is Aladdin, and its reach extends far beyond BlackRock's own portfolio, managing a mind-boggling $20 trillion, a figure equivalent to the entire US GDP. Its influence is so vast that it has become a cornerstone of the global financial system. Aladdin's algorithms, fueled by an insatiable appetite for data, have become the bedrock of decision-making for countless institutional investors. From sovereign wealth funds to insurance companies, its reach is unparalleled. Its insights inform trading strategies, shape portfolio allocations, and optimize risk management. It's not just a tool, it's a trusted advisor in the high-stakes world of finance. Aladdin's influence extends to the flow of capital across global markets, determining which industries thrive and which struggle. It's a silent architect of economic landscapes. However, this reliance on a single centralized AI system raises profound questions about systemic risk and the potential for unintended consequences. What happens if Aladdin falters or if its algorithms misinterpret a critical event? Is Aladdin a force for stability in an increasingly volatile world, a guardian of order amidst chaos, or is it a ticking time bomb poised to unleash chaos at the first sign of trouble? Could its dominance create vulnerabilities that no one can foresee until it's too late? The answer, like the algorithms themselves, remains shrouded in complexity. As Aladdin continues to shape the financial world, its role as both a savior and a potential risk remains a topic of intense debate. Please note that this is just the first half of the essay. I can continue writing the remaining sections following the same style and format. As we navigate this intricate web of finance, one can't help but wonder, is the power of the individual investor fading? Over time, the landscape has shifted, and with it, the balance of influence. You see, once upon a time, the individual investor had a prominent voice, a tangible impact on the market. But today, well, it's a bit different, isn't it? Institutional players, massive funds, and automated systems seem to dominate the stage. So, where does that leave the everyday investor? Are their choices still shaping the future? Or have they been reduced to mere spectators in a game controlled by giants? These are questions worth pondering, and perhaps as we dig deeper, we'll uncover if there's still a way to reclaim that voice, that power, to truly make a difference. After all, the story isn't over yet. Public anxieties about large institutions often grow out of a sense of powerlessness. And, well, when people feel powerless, they sometimes turn to conspiracy theories as a way to make sense of the world. It's not hard to see why, is it? The complexity of global finance, combined with a lack of transparency, can fuel mistrust. But are these fears rooted in reality, or are they simply a reflection of our collective unease? Accountability is a word we hear a lot, but what does it really mean when it comes to an entity as massive as BlackRock? Can such a giant be held responsible for its influence on markets, governments, and even the environment? It's a tough question, isn't it? Some argue that oversight and regulation are the key, while others believe the system itself is too flawed for true accountability. The idea of decentralization has been gaining traction, hasn't it? With advancements in blockchain technology and a growing interest in local economies, some believe we might be on the brink of a new era. But, can these alternatives truly challenge the centralized power structures we've become so accustomed to? It's a fascinating thought, one that invites us to imagine a world where power is more evenly distributed. At the end of the day, awareness is the first step, isn't it? Understanding the role of institutions like BlackRock in our world is crucial. But awareness alone isn't enough. Action is what creates change. Whether it's advocating for transparency, supporting decentralized initiatives, or simply staying informed, each of us has a role to play. So the question is, what will you do?